Can we take a holiday yet? Is this going to be sort of downturn for M&A?
Look, I think we will face a downturn, but I wouldn't take it yet. Last week was the biggest week we had of the year, over $100 billion in transactions. So there's still dialogue going on. I think we'd be naive not to assume that, given the volatility in the market, particularly if it continues, is making it tougher to price deals. I think starting a sell-side process right now, you'd have to be reasonably bold if you're not already underway. So yeah, look, I think we will face some issues here, but it's remained surprisingly good.
But the deals we saw last week are deals that people started working on weeks,
sure,
if not months ago, probably in 2019. What's the appetite like now to actually go and get into a conversation, whether it's as a seller or as a buyer?
Yeah, look, the dialogue is still pretty good. I think the question you've got to ask yourself is, okay, do I get ready now and wait? So is this a temporal issue in terms of getting the volatility to sort of subside somewhat? Remember in 2011, in the summer, we had a pretty big market swoon, and there was a couple of months in there where some big stuff that was being rumored about didn't get done, but in September and October it actually did. So the thing that gives me some hope here, you know, I'm not going to get into the medical side of the virus or anything like that, you know, is that a lot of the things that are driving this, things like tech disruption, the activist threat, need for organic growth, capacity consolidation, I mean, those are secular trends that haven't gone away. So, but I do think we will face a temporal issue here, and I do think we should expect volumes and announcements to be somewhat muted, particularly here in the U.S. If we shut schools, people stop traveling, et cetera, et cetera.
Muted meaning what? How much are we going to be down this year?
Great question. I knew you were going to ask me that. Since I was wrong last year, I guess I can take another shot at being wrong this year. Look, I do think we'll be impacted to the tune of 15, 20, maybe higher, a little bit higher. That's assuming that this doesn't carry out, the virus, you know, sort of gestation and expansion doesn't carry out through the rest of the year. That assumes a relatively short period where, you know, it appears to be contained.
There's a travel ban, and obviously that's affecting everyone differently. I know you guys have a sort of firm-wide one at the moment for non-essential stuff, a lot of other banks. Does that make it much harder to actually continue deals that are already in the works because you can't get in the room with people, you can't do the face-to-face stuff that people in the advisory business sort of need to do?
Look, it has an impact, but let's go back. You know, the guys that have been in the business for a long time like me remember when we were in an all-paper world. So, you know, you get the lawyers the night before a transaction or 2 nights before, and you'd have 15 people around a table, and you'd be negotiating parts of the merger agreement. That's done now. Just you digitally transmit drafts back and forth. We've got virtual data rooms. People are much more comfortable with video conferencing. So look, I think it's going to have an impact because there's nothing like the face-to-face and the ability to really look somebody in the eye. But the flip side of it is with technology, we can do a lot we couldn't do 10, 15 years ago. All
right, so let's say it delays a lot of deals that are already in the works. Then we get the election coming up later in the year, assuming that doesn't get delayed. What happens to those deals that kind of end up getting squeezed between this volatility and the virus, and then obviously the election and all of the uncertainty that provides?
Look, I mean, again, it's the right question, and I don't know that I have a great answer for you. I do think some people will decide to defer and see what happens. A lot of it, you know, we got to get through the primaries and see who basically the candidate is on the Democratic side. But again, I come back to a lot of these issues that these companies are facing are not going away. And so is this, I'm really real believer this is temporal, and it's not necessarily a secular downturn. A lot of people talk about the end of the M&A cycle. I just don't believe it yet.
Well, let's talk about that. You had a front row seat to the last time that happened. You were at Lehman Brothers, obviously, in the crisis, and then moved on from there. What echoes do you see now to that moment in time?
You know, I recall in 08, I mean, the financial system was, you know, really on the verge of teetering. In fact, it did teeter. I don't see the analogy at this point. That's not to say, you know, if we're having this conversation in 9 months and we're still, this virus is still, you know, sort of profligating, that's a different conversation. But I don't think you can compare the two because we really were kind of on the edge in 08.
Just lastly, the kind of deals that we will see being done, like what conditions, I mean, the conditions we have now, what kind of deals do they favor?
I mean, look, the best thing to do is look at, tech and industrial have driven the market. It's almost half the market at this point. So a lot of that, I don't know why I would necessarily veer from that at this point. I think rates, given where they are, I mean, if you can get sellers and buyers to agree with this kind of volatility, if I'm a financial sponsor, it gets, you know, my debt costs have just gone down. It drives down my weighted average cost of capital. But beyond that, it's, I don't know that I have anything brilliant to say on that. I mean, look at the areas that are being impacted, right? I mean, clearly travel and leisure, auto and logistics. But then you look at places that are going to benefit from this, parts of the healthcare chain, e-commerce.
Anything that involves staying at home, basically.
So, you start, and then there's a group in the middle. So you got to sort of think about, so what does that all mean? I mean, if you're really getting beat up, does that push consolidation? On the other hand, if your business is really taking off and you've separated in terms of valuation and other things, do you want to be opportunistic here?